May 18th, Thursday. Market analysis, Stan Ehrlich. Good morning. 10:11 California time, a little after the midday session, which would be 9:45 here. So about a half hour after that. We start out with stock market indexes. I'm reverting for the moment back to my prior format. A few little problems this morning, but I still want to get you the YouTube recording. Here we go. S&P 500. We have made new highs since February 2nd, but the exact high on February 2nd, we did not get above. We came extremely close to it this morning, and it is pulling back a little bit at the moment, but not very much. Very normal in an uptrend. We just don't want it to close lower on the day, especially a lot lower. The worst case scenario would be getting below yesterday's lows. That would be a short-term game changer. So stay where we are, up $1.28 at the moment, and gain some more ground before the close. Excellent. The long-term bullish opinion I have had since October 13th has been panning out with the usual back and forth movements. This is the DIA. It's very slow and has not yet made any new highs for any major amount of time, for a month or two or three at the most. But lately, since the high in December 13th, on December 13th, we have had a high that is lower than December 13th. And then just a couple of weeks ago, we had a high that is a little bit lower also than the previous high. So we've got three highs that are lower than each other. Now that's kind of defining a bear trend, but the lows over an extended period of time since October 13th again, that was the October lows, and I'll try to pinpoint them like I did last year for you again this year, coming up soon, October. The lows are significantly higher than each other, two of them. So what we got is sort of a rock and a hard spot. Good support under the market, substantial support over the market. And this is what we used to have on the Qs, which are new high ground for over a year today. And the S&P, which is making higher highs periodically, very smoothly. But the DIA just has had a lot of trouble, probably because of the expectation of the interest rate moves in a very generic sense. I don't see anything wrong here. It's just slow to do what I expect it to do. And what I expect it to do is hold support on the declines, break resistance on the rallies, break into new high ground above 342, let's say, and start to make new highs for a significant many months. And very soon, month or two maybe, new highs for over a year. All right, let's go look at the QQQs, and then we're going to go to futures. In the QQQ, we have an overbought condition I started talking about yesterday. Now, when you first get overbought, there is the chance that it's only one day, and you're going to pull back down again somewhat for a little while for usually a minor downside correction. But the overbought conditions can last a few days and sometimes several days. I've seen it last a couple of weeks plus, but that's very rare. So you go with the usual. Today's the second day it's overbought, and it's skyrocketing very substantially relative to the last few weeks. And this, ladies and gentlemen, looks like a blow-off top. We have had a very substantial gain every time you look back 2 or 3 or 4 more days, 5 or 6 or 7 more days, 10 days, 12 days. It gets stronger and stronger, quicker and quicker. The relative strength index is up into significantly high overbought territory. And I am expecting any time now a downside retracement in the Qs, I would think at a minimum down to 327 or so. That does not do anything to the long-term bull move. It's just a correction to probably be a buyer on. And I hope I get some buy signals. I hope I don't get any sell signals up here, unless if I do, it turns out to be a whopper and turns out to be a very important bearish turning point. I don't expect that. I don't think that's going to happen. This bull market starting October 13th is coming along in general great, especially for the Qs. S&P real good, and the DIA's just having a little trouble recently. Buy corrections in a very broad general sense and sell out on extreme strength like what we're looking at right now. Instead of just selling out, raise your protective sell stops, your stop loss orders tighter and tighter. Next, we're going to be looking at the futures contracts. The S&P 500 is an index as well as a futures contracts, the E-mini, like these days, so many futures. Now, no change from the comment from the SPY, the ES, and of course the micro, et cetera, are all doing about the same thing. The only difference is this tracks prices at different times of the day. It's got a much longer trading time frame. So it does have most often higher highs and lower lows because of the extended hours. Next chart is the bond market. Hey, we did not hold support. Bonds are sinking, and that is higher rates, but I think the market doesn't care too much about it except for maybe the Dow. And I expect this to bottom out very soon, probably in the area of 127 into 126 a little bit. We are close to being oversold, not quite. This subgraph at the bottom is an RSI, but it's my custom relative strength index. Not exactly the same as Wells Wilder's originally drawn close to close RSI chart. Mine reflects 4 different levels during the day instead of 1, and different time frames. So bonds should hold on a little bit more of a dip. What about the 10-year notes? They're just coming back to support right now, which is that red bar. I should have carried it to the right a little bit more, but we're almost smack in the middle of it. Therefore, likely price level to turn around and start to rally back up. And it is close to oversold. So that's exactly what I'm expecting for interest rate futures, a reverse in the next day or two, maybe, a little lower, maybe, and then starting to come back up. Long term, I'm still bullish, very bullish on interest rate futures. Next, we have a double bottom formation in the crude oil. I'm looking for a new high to be a major breakout, but I don't think that's going to happen. That high of 83.5 between the two lows is the breakout point for this double bottom. It won't work. We're going to end up going a little more sideways. It's going to go flat like it started to already at resistance and start to make lower lows again. Double bottom will fail. I'm bearish, looking for lower lows. RSI in very neutral territory. Next chart, heating oil, another energy. Downtrend as well. Support held recently, major historical support, but the trend is your friend. And after this rally into resistance, which it just has done and is still basically there, I'm looking for it to turn back down again and start to make new lows. I'm bearish. Next, natural gas and energy just got overbought today. Is that doing anything super bullish here? Well, it is a new high since late March, a couple of months. And that is interesting, but it hasn't closed above those highs, specifically on April 18, 19. If we can close above those highs, it makes it a little bit more bullish. But since we're currently trading below those old highs, even though you punch through it on the upside, it's not holding it at the moment. Closing below the old highs is not necessarily a real good bullish sign. It could do it the next day, but this is also, especially because it's overbought, a potential turning point back down. Let's wait and see. Our previous signal, which was the buy signal a few days ago, was working great. In fact, where the green dots are is where we're looking to buy on an ER3. Remember, ER1 is always in the trade the moment the signal is generated, the day it turns green or red. So we're never left behind. But we can be with an ER3 if it doesn't hit the dots, and it needs to hit the red or green dot. This hit the green dot just perfectly 3 days ago, and it's making a lot of money. What can I say? So even though my comments were a little on the negative side a moment ago, that's simply my interpretation of what I'm looking at, not what a machine driven code I wrote or developed does. They're two different things. One of them's a human being interpretation. Another one is a machine doing it and don't care about the psychology, don't care about the emotion, et cetera, et cetera. Next chart, gold. I thought this was going to happen. I told you, well, I didn't tell you, I mentioned it was very likely. We have just had today a significant bearish breakdown. And we have seen a market that's had a lot of trouble losing upside momentum for a month or two, and finally now breaking into new low ground for quite a while, a month and a half, and a little longer than that, frankly, about 2 months, and a new low close probably for 2 months. That's not necessarily indicative of a bull trend. Now, the trend is still up, and we are getting, for the very first time now, oversold. So let's see what happens in an oversold condition, but after it's breaking out to the downside. I think it's going to go down a little bit more and then bounce. Can that bounce go anywhere? And if it does not go anywhere and stops at resistance, which is just above yesterday's trading range, and then start to turn down again, and this will take a week or two, that's not good. That'll be bearish, adding to the longer term bearish expectations. So I think gold may have topped out. I wouldn't go short here because it's oversold. I would go short on a little bit of a rally. Let's look at the other precious metals. Just a moment. Wrong key. There we go. Wow. I can't, well, I can, but this is on a rating of a 9.9 perfect combination. We have a double top formation. Both of the rally highs, the two highest highs, are both ER sell signals that are red, giving you an ER1 short sale for a few days that made a little bit of money, but not the ER3, not very much. But it did get triggered right there at the high of the day, almost the day after the first sell signal at the top. The next sell signal did catch the red entry, and we could still be short from that. We never add to a trade if you get another signal. You could if you wanted to, but that's not the way the code is written. So we're short from the date of 5/5/23, and we could also be short from 5/10/23 when the day after that it collapsed. It dropped and broke out to the downside. I measured the downside objective on the double top. That objective at a minimum is 22.9. We have a new low and a likely new low close again today. There's only been one up to two. One of them is very small. 2 up days since we got short. And what can I say? Next chart. Double top in a very broad sense. We have a sell signal on top on the first one. And another high in the same ballpark price level that got overbought. Plus, that's the first high on a much closer test of resistance, same thing. And it didn't get overbought almost, but it topped out. Now let's prove that it's the top. You're starting to make lower lows again. We need to break below 1039 on a closing basis in order to have this little double top in the last month or so get triggered and have a minimum downside objective approximately, I'm going to say 952, 951, 950, somewhere around there. Now that's going to come very close to breaking below this great buy signal at the bottom in order to create the broad double top. When you break below that, Well, I totally expect it to come down all the way to 805, and who knows, it could come down even a lot lower than that. So I'm starting to turn slowly long-term bearish. I got no whopping signal like we have seen October 13th in stock market indexes. I screamed bloody murder on that day and told you it was coming. Anyway, this looks increasingly more bearish. Next chart is high-grade copper. Now, high-grade generated yesterday, very first day, a brand new buy signal. This, to most people, looks kind of scary. You want a buy signal? You want it to go straight up. It doesn't work out that way. I actually want a retracement into the range of the green or red reversal day, which was yesterday, bullish green. And this did it. Now, it's done it a little bit more than I'd like, but it hasn't violated any rules. We would have did go long at 3.73, currently trading at a little bit of a loss at 3.68. Next thing I want is for it not to touch the yellow dot. That's we're out. We're stopped out with that loss. And if it doesn't hit our protective sell stop and starts to make new highs, then our protective sell stop under the market will have started past tense to go up. And that depends on a couple of factors, how fast it goes up and the way it goes up. So right now, minor loss. If you want to get into the long side of this, your business. I can't say no. You'll have a smaller loss than I will if the yellow dots are hit, and you'll have a bigger profit if you get out around where I get out. I don't know where that's going to be. The system takes care of it. This is 100% automated ER signals. We'll see what happens with this. So I'm still sticking to my bullish guns, even though this does not look right and it's scary for most people. Been through it 100 times. Sometimes they work, sometimes they don't, but that's emotional stuff. You're not supposed to have emotional stuff when you're trading. It's mechanical. You've got to act like a machine. You've got to follow your rules. Next chart. Oversold now, third day in a row at the low. Currently trading slightly higher than yesterday's close. No big deal. Maybe a reversal and the beginning of a rally. In fact, look how low the RSI got. Every time it's gotten down to these levels, even a little higher than this, but let alone as low as it did get, like 15.5-ish, the market has turned back up. We got a signal on that day, didn't go very far. Every time we got this oversold condition, that was a bottom. That was a bottom. We're talking to the day, not a signal, just oversold. What about back here? Almost, and then it worked. What about these two? That one worked fantastically. Very big rally in 3 days. And that one worked very nicely also. A very big rally in a few days. Now, don't think that just because the rally was for a few days or a collapse, a break, a downside reaction is only a few days, you're going to lose money because it didn't last very long. BS. My trading system moves a stop very quickly. In fact, sometimes once every minute, depending upon how quickly markets move. We track and move our stops based on 1 minute data from these daily signals. You can use the signals the way you want. If you want to use the signals the way I use them on my strategy, yep, you got to pay a little bit for that. Contact me. Next. BO is bean oil, soybean oil, oversold now for a few days and starting to work its way back up. And again, the same commentary. Look what happens when we get this oversold. Almost always, it turns up. Okay, so I'm a modestly friendly for a little rally in a bear market, coming up to probably 50-51, and going to turn back down again if it stays a bear market, which I fully expect. Next chart, soybean meal. In the process of making new lows for months since last December. Remember, this is the 5th month of the year. We're almost halfway through this year. Pretty close. So anything last year is now all of a sudden 6 months old or more, probably. Bear trend since March, and lower lows, lower highs. We're starting to make another lower low today. I'm looking for a test of probably 381, 381, 386, maybe 400 very soon. Currently 416.9. Next chart, corn. We had a couple of buy signals that worked for a couple of days. The second one didn't work, frankly, at all. You probably had a little loss on that one. But this one did produce a profitable trade for 1 or 2 days. This system was developed originally for swing trading or scalping. Those two share a lot in common, except for the, staying overnight, which is a swing trade. Scalping, day trading, you get out before the close. There's a margin thing there. So, looking for lower levels still. Downside breakout. Nothing different than what I said yesterday. Next. Same story here. Resistance stopped the rallies. There were basically 3 rallies after the downside breakout. Even a buy signal that we had very nicely lasted 3 days back on May 3rd, is now totally in jeopardy. And I think it's going to get broken. And we would have been out certainly a couple of days ago. So you do get buy signals and bear trends. Hopefully they'll give you the opportunity to make some money. You're fighting the trend, true, but how do you know that could not have been the new low for months to come? I don't, even though I developed a system. I only want to know if there is a turn in a market that could be a huge turning point, like the one back on March 8th of 22. That was the beginning of the war. And we have a red bearish sell signal in wheat at the top of a screaming, as a matter of fact, it couldn't go up faster. Your limit up bid on the opening bell and stayed there all day long for a variety of days on the way up. Or you opened and then zoomed up to limit and probably locked limit up and closed limit up for days in advance of this sell signal. People drool over that one. Next chart, live cattle. Got very close to the last low, good. We got very close to the last high, good, but we're coming up again. The trend is obviously up, and that's been for a full year now. I don't see any signs that this thing is really topping out. You're going to see lows get broken more than just once. You're going to see the highs get broken and stay in new high ground and keep going, which is exactly what's happened for quite a long time, even though we've got the occasional sell signal, This was a buy on the bottom of the break. That's great. And here's a bottom almost with a buy signal at the lowest low. So I'm bullish in cattle. I can't help be. I need to break above these highs on a closing basis to prove me right and see how far it goes. I'm not sure. Next chart. Hogs, Miss Piggy. We had a buy signal. It did go up 1, the higher high, 2, higher high, then a bit of a dip. 3, 4 days later, higher high. 5 days later, higher high. 6 days yesterday later, higher high. But yesterday I mentioned it had a bearish engulfing. That could be the killer of the trend, or not trend, of the rally from my very good buy signal. And it seems to have been. We now have a lower low, lower than the low of the buy signal, the green bar. And that just kills everything if you were stubborn enough, so to speak, to stay with the trade. You should not, in any way, shape, or form, be in another or any long position, in my opinion. Not unless the damn thing rallied a lot by the close and you have another reversal back up. That doesn't seem to be the case at the moment. Next chart. Long-term uptrend, obviously. OJ hit the apex of an old pennant, which obviously broke out. And I keep mentioning this, approximately halfway to 2/3 the way toward the tip of a pennant is when they usually break out. This one was about halfway. So we knew when to look for it and what to look for. And it took a couple days to do it, but that's what happened. But it got very overbought. and I'm talking very overbought, got up to 90. We only see one other example on a screaming bull move back in February. I think that's very much weather related. And frankly, this last rally could also have been, I don't know. I'm not a fundamentalist. Fundamentalist. Fundamentals drive a trend, I totally agree. But it's almost impossible to know that the fundamentals have changed when you can see the changes in the way the market moves real time. Fundamentals are typically not published or available in a timely manner. Price action is real time, tick for tick, second for second. Next, we had a sell signal in cocoa just a few days ago. The rally has been pretty good, a little bit better than I would have thought, but today we're now after a minor new high, not doing any damage to the signal, currently lower than the last couple of closes. This looks like it's on the way down. If you didn't get short, I don't think you're too late. You might have a little bit larger risk at first than I do, but your profit potential is almost as good, and I think it's about to start to make new lows. Next, so sugar, a little bit of resistance overhead, causing some problems. Fine, right now sideways for about a month. No particular comment to make. Possible top, I'll say that much. Okay, we got the E-mini. Again, we've gone through all my charts. I'll talk about forex again someday soon and the sectors. You have a great day. Talk to you tomorrow.